Happy Tuesday morning, Middle Tennessee. Hey, this is Joe Hafner here with Hafner Real Estate. I'm here in the Hafner Real Estate Command Center and going to do a little live real estate Q&A this morning. Reason I do this is because I meet and work with clients all the time and they have questions. And there's questions I see that are repeated over and over with multiple clients. So what I want to do is I want to help people achieve their real estate goals. So a lot of people have goals and they want to own a house, or they have a house they want to sell, or they have things like that that are going on. And they're not able to do it because either they have misinformation, they have questions that don't get answered, whatever. So what I would ask you to do is this content here is really valuable stuff that can help people to buy a home, sell a home, all that. And whether it's working with me directly or working with someone else, I want this content to be able to help people be able to achieve their real estate dreams and goals. So if this is something that's of value to you or someone you know, please share it with them, post it on their wall, share it, go to Hafner Real Estate and on Facebook and like that, like my page. That way you'll see this all the time in your news feed. But so today we are going to be talking about closing costs. I had a client the other day where they just didn't understand. They said, what's the deal with these closing costs and why are they so expensive? So a lot of people, they hear the term, it's a very common term you hear all the time. Hey, we're going to get the seller to pay our closing costs for us. You know, we have these closing costs that go with the sale, the purchase of our home. What is it? What is a closing cost? So simply put, closing costs start out as they're the expense of the loan. So example, you're going to have some fees from the lender in order to get your loan processed and approved. You're going to have an appraisal fee. You're going to have what they call a doc prep fee the You're going to have maybe a survey involved with the house, but you're going to have things that the lender wants done in order to approve the loan. The biggest thing really in closing costs are when you get a loan where your insurance and your taxes are included in the loan, right? So when you're paying your monthly payment, you're also paying insurance, homeowner's insurance, you're also paying your property taxes. So that's what they call prepaid. So what the lender does is they require in your escrow account, which is set up as part of your loan to be paid out every month. See, the lender wants to make sure that you have homeowner's insurance because they owe most of the value of that house, right? So if something were to happen, they're on the hook for it. So they want to make sure that your homeowner's insurance is in place so that if the house burns down or something happens, that insurance will cover them so they don't lose out on their investment in your house if something like that were to happen. So they want to make sure that insurance is in place. And the second part of that is they want to make sure your property taxes are paid, because when it comes to things that could cause the lender to lose their interest in the house, property taxes are the biggest one, right? So if your property taxes are not paid on time and the municipality where you live goes to do a tax sale, that tax sale is above the lender. So that tax sale would override the lender's interest in the house, and whoever buys that property at the tax sale, the lender's got to figure out a way to deal with them, as opposed to the lender being the top dog if something were to happen beneath them. So the two things they want to make sure are covered: they want to make sure your homeowner's insurance is paid regularly and that your property taxes are paid. And the way they do that is they will often require, in fact, most loans you see, they'll require the homeowner to have an escrow account, which is set up by the lender, and they collect funds for the escrow account to pay for your taxes and pay for your insurance. So they collect that, and what they want to do is when you go to close your loan, they are going to collect probably a year or more worth of taxes and insurance to put in that escrow account. So you see that on the settlement statement, it says prepaids. Those prepaids are paying for your taxes and insurance ahead of time. So that's usually the biggest part of closing costs, is getting that escrow account funded. Other things that are big on there are, you'll see what they call tax stamps. So in the state and the county, at least in Tennessee, the state and the county, they are charging you a tax basically to have that transfer of the sale. You'll hear it called a transfer tax too. where they will take that based on your purchase price of your house, the state and the county are going to charge you a fee that is collected when your deed is recorded. And that's part of the closing costs that are going to be paid out to cover that. So usually by the time all these things are pulled into place, you know, you also can add the cost of the settlement fee, which is when the title company closes your loan, they're going to charge a fee to close on the sale of your property. Also, too, sometimes included in those closing costs are title insurance. But title insurance can either be a distinct thing on its own, or some people include it in the closing costs, but that can be a decent amount of money as well. So between those things, you can end up with several $1,000s worth of expenses that are part of the loan. And what happens is a lot of buyers, if they don't have the cash to pay those things out of pocket, they will ask the seller as part of their negotiations to pay those on their behalf. So all they're doing, it's an accounting thing where the seller is paying it so that they can really raise the loan price and have those closing costs covered. They're basically financing their closing costs by asking that seller to pay for them for them. So the seller pays it out of their proceeds and the purchase price is a little higher. The buyer is able to buy the house and not have as much cash come out of their pocket. And the seller still, it's just an accounting thing for the seller. They're going to get the same amount on their bottom line, because if the buyer were paying their own closing costs, oftentimes the offer they would have made on the house would have been lower. So that's why buyers will ask sellers to pay it. Now, in the current environment where we are in a seller's market, which means there's many more buyers than there are sellers, that's pushing prices up. And we'll talk about appraisals on another day, but what happens is appraisals come in, and if that appraisal is low, you could have a problem where your loan might not be approved if the appraisal is low. So you will see sellers not agreeing to pay closing costs for that buyer because they're afraid that if that appraisal comes in too high, they now have this money that they're paying on the buyer's behalf that they might not get that additional purchase price on the purchase of the house from that. So currently, when we're in a seller's market where those values are being pushed up and people are offering the most they possibly can, and appraisals are sometimes causing deals to fall apart because the appraisal comes in too low, that would be why a seller would normally not be willing to pay those closing costs on behalf of the buyer. When we're in a buyer's market where there's way more sellers than there are buyers, and house values are either staying steady, being pushed up very slowly, or actually falling slightly, appraisals are not as big of a problem, and it's not that big a deal for the seller to pay those closing costs on the buyer's behalf. So if I'm a seller and I have two offers that come in, one that is, let's say that the net to me is the same, but one, the price is higher and the closing costs are included, and the other, there are no closing costs asked for and the price is lower, but the net out of both deals comes to me, I'm going to choose the one where I don't have to pay closing costs, not because I don't want to pay things for that buyer, but because I want the highest net I can get, and I want the least possible chance of there being an appraisal issue where my appraisal comes in too high. So hopefully that answers some questions about closing costs. If you see this and you have questions, whether you're watching it live or later, put them in the comment section below. I'll come back and I'll answer them. But so that's a little bit about that. We will talk again soon. I appreciate you joining me. Thanks.